This podcast is brought to you by my friends at Coinbits, the oldest Bitcoin-only exchange. If you're listening to this podcast, you get that Bitcoin upends everything that government schools teach about money. Coinbits is the money app designed for people like you who understand Bitcoin and want to use it every day. Coinbits pioneered the concept of roundups, which converts your spare change into Bitcoin. Simply connect your debit and credit cards and your usual purchases are rounded up to the nearest dollar, letting you save more in Bitcoin as you spend more. My favorite new Coinbits feature is Spending Insights, which gives you real-time feedback about how much of your money is chasing high-time preference, short-term gratification, and how much you are providing for your future with low-time preference choices. As always, Coinbits provides a terrific self-custody experience. Connect a hardware wallet for automatic withdrawals, so you keep counterparty risk to a minimum. Coinbits also offers peer-to-peer cash and Bitcoin payments, target orders, price alerts, and more. Coinbits can help you do almost anything you need with Bitcoin. Go to coinbits.app/Saifedean and get 3 months free. Again, that is coinbits.app/Saifedean, Saifedean. Hello, welcome to the Bitcoin Standard podcast. Our guest today is Jeff Booth. Jeff is a longtime entrepreneur, investor, and author. He wrote a book called The Price of Tomorrow, which we hosted him to discuss a couple of years ago. It's been a while. And it's a pleasure to be chatting to him again and having him here again. Jeff is a good friend and somebody who's always got interesting ideas on what's going on in Bitcoin. And he's here to talk to us about some of his new ideas and new investments, in particular Fedi. And we'd hosted Obi, the CEO of Fedi, a couple of months ago on this show. So it's great to have you now to follow up on this, what I think is a very interesting and exciting technology.
Awesome. It's so good to be here. Thanks.
Great having you. So, first of all, tell us what you've been up to. How are things since you've written The Price of Tomorrow? What's been happening?
Well, I think you know because you would share the same the same insight that our economy is getting worse and worse because of money printing and distortion, and that centralizes, and things should be getting better and better for the world writ large, and we're on top of a system that is centralizing and making everything worse. Bitcoin is the way out of that, and few people know. And I think there's just not enough people that realize what that looks like and what the attack vectors look like, because it's such a complicated. It's actually very simple. The natural state of a free market is deflation. It means we've never lived in a free market. We've lived in a control structure that gets worse and worse over time, and we go to war. We elect leaders that divide us, and we go to war over that control structure. And it's looked like that throughout time, and then repeated throughout time as the winner of the war resets the currency and says, "We promise we won't do it again," and then it starts again, and it repeats again. And so we're in that trap as humans, and we have been for 5,000 years. As we trade with each other in the world to get more value. But a system, if you could extract some of that value really slowly from other people, you could create a whole bunch of control by doing so. So your insight, my insight, same thing, was we had a discovery in Bitcoin that changes that forever. And that means all of our past models on what it looks like, or what Bitcoin looks like, that are irrelevant as long as Bitcoin stays decentralized and secure. So, what has happened since I wrote the book? Since you wrote the book, what's happened is a reinforcement that you were right, that I was right, that and you can see if you're using the right model to measure the world. Bitcoin, where prices fall to the marginal cost of production, the only free market, then your life is getting better and prices are falling. If you're using the wrong model to measure the world, a fiat instrument is probably the opposite. And that whole thing is accelerating right now.
Yeah, no, I mean, obviously, I agree with you. I've been thinking about the issue of deflation quite a bit recently. And one thing that I've been thinking about over and over and over again is just how different the world would have been over the last century if we hadn't had fiat money. and how different our quality of life would be if we remained on the gold standard. But then, even thinking about the gold standard before in the 19th century, back then, I think if you look at the ratio of physical gold to money outstanding in the broader sense, in terms of both currency bills as well as checking accounts and broader credit instruments created by banks and central banks, even in the 19th century, there was a significant amount of effectively fiat inflation added on top of gold. So in 1913, for instance, the Bank of England only had 39% of its outstanding liabilities covered in gold. So it could redeem gold because they knew that more than, I think, 31%. So the more than 69% of people won't show up at the same time to try and get the money out. And so because of that, there still could pyramid all kinds of inflation on it. And I think that's why, if you look back on the 19th century, prices of things in terms of gold or in terms of dollars, which were pegged to gold, they didn't decrease as much as they probably should have if we had been on a strict gold standard. And so to think about just how much productivity has been stolen from money holders over the last not just 100 years, maybe 150 years, and maybe even more.
The entire history of humans, it has the same flaw in all of our history books. Everything ever written has every economic system, every political system was really a control system, because it's always had the flaw, because what the free market demands, because prices fall to the marginal cost of production and we trade with each other all over the world. Remember, we're part of the equation, right? So how could an entrepreneur create more value, which they have to do to be able to survive? So they have to create more value than what was there before, and we use the thing they create. That means every job that working for an entrepreneur has to have the same equation. So we're part of the equation as purchasers, and then we trade with each other all over the world to gain more value. Now, I think this is the insight you're coming to, Saif. It has to have had theft in money for a lot longer, but we wouldn't see it because you're measuring inflation from zero instead of the implied productivity rate, productivity growth which is deflationary. And if you add more technology to that, it's faster deflation. So most people are measuring inflation through a faulty measure of CPI and everything, that basket that constantly changes. But they're talking about the small part of the thing, basket changing. The bigger part of the iceberg underneath is that productivity growth from zero to minus, right? Minus 5%, minus 7%, minus 10%. That is being stolen from you too.
It is. And it's really, really one of these jarring discoveries when you start thinking about it and then trying to think about it mathematically. What does this mean? So imagine, just as a thought experiment, imagine if the dollar stayed pegged to gold in 1914, and then all of the world's currencies remained pegged to gold. You would expect that in a real gold standard, you'd have had a drop in the prices of things, houses. The vast majority of goods likely would have declined compared to money, because money increases at a very small rate every year. And so try and think, in that world, what would be the price of $1 million house today? So $1 million house today has probably been appreciating at around 5-6% over the last century or so. If it was
8.5%, but it's literally the rate of money increase. It just matches the money manipulation. Yeah,
that's true. I remember once when I was visiting Michael Saylor, he showed me the deed for his house from 1930, sometime in the 1930s. And we looked at the price then, and we looked at the price now, and we ran the numbers, and we found an annual growth rate of around 7%, which is basically the supply of money growth rate, more or less, very similarly. And it's, if you're doing a compound annual growth rate over a long time period, then it's going to be in the rough range, because any kind of small deviation is going to be is going to accumulate very differently. So it is quite striking how similar it is to the supply growth rate of money, and you'll see this in all kinds of goods. You would expected all of these things would be getting cheaper instead of getting more and more expensive. And so the price today, you could have a house for a few $1,000s probably. And these $1,000 would have been, would today be worth a lot more than what they were worth 20 years ago. So if you started saving when you were a child, working summer jobs and just accumulating money, the early money that you save 10, 20 years down the line is maybe worth 50% or maybe even 100% more as you try and spend it in order to buy the house. And life just keeps getting easier all the time. You're always able to buy more and more house for your money if you wait.
Principles of Economics, my complete guide to understanding economics, is now available in hardcover, audiobook, and ebook from Saifedean.com, Amazon, and many more booksellers worldwide. And now I am also teaching a course based on this book on my website, Saifedean.com. Principles of Economics will run the whole academic year, from September to June, and will have a new lecture every 2 weeks, as well as weekly live online discussion seminars open to learners from all over the world and from all walks of life. Whether you're a student, a professional, or a retiree, you are making economic decisions every day, and this course will arm you with the wisdom of centuries of economists to improve your economic decision-making. You'll also get a free book of Principles of Economics if you sign up for the course. Go to Saifedean.com and sign up now.
Yeah. So this is a global phenomenon, and the second order or third order effect of this global phenomenon is, so let's go to the first order effect. So the one you talked about is relative to currency. And so that now you can see prices now relative to technology. A Sears house in 1913, 1920 delivered to your a catalog house delivered to your lot in the U.S. was about $2,500 for 2,500, 3,000 square feet. You had to build it, but that included the entire lumber package, doors, windows, plumbing, electrical, everything. Every single thing inside that house, doors, windows, plumbing, lumber, all of those things have technology in them that has a less cost of labor than they had in 1913. So all of those prices too, I've been to lumber mills, they're just completely automated today. And so all of those things should be cheaper than they were in 1913. So that's the second order dimension. So beyond what's money printing, just the even part, now the second order dimension is all of those things would have fallen to the marginal cost of production in a competitive market. Now the third order. Today, this world we're talking about requires about, call it 200 million people extracting from 7.8 billion people. Because in some parts of the world, to keep up this Ponzi scheme, their labor has to decrease lower and lower and lower to be able to extract more. So it's an extractive-based system. What that would mean is we don't have those 8 billion mines competing in a free market. They're almost slaves in a market. So they're not, their minds, the best of them isn't part of a system to inscribe the best for us. They're left out. They're extracted from. And then we go to war to be able to keep that, and we keep on keep that system in check. Add 8 billion minds to a system that is in service of us, and you can see you can start to imagine the profound implications of what we're talking about. But what you just said, it's so hard to imagine because it's never been there before.
Yeah. And it's, in economics, a big thing about economics and the way that we think is to think about the seen and the unseen, to think about the opportunity cost, to think about what could have been. And here, first of all, as we said, there's the aspect of the money robbing people of the value that they own. But there's the second order, which is that wealth is not just being lost. It's not falling through the cracks. It's being robbed. and it's going to finance governments, and it's allowing governments to do all kinds of things all over the world that are massively destructive and massively costly in terms of money, in terms of resources, in terms of real capital, but also in terms of human beings, in terms of wars, and in terms of people's lives destroyed. And then to imagine how much suffering has been enabled by government money, how much more war we've been able to have because of all of this wealth that is constantly being stolen from people all over the world. And then to imagine what would have happened with all of these resources if they had been spent on just producing consumer goods for people, and all of those human brains who were dedicated to all kinds of destructive things, and all the people who died, if they were with us to provide their inputs and their ideas into what we're doing, how much better life would have been.
Yeah, it's really, it breaks your brain in thinking about this because it's the unseen. But that's where we're going. And as long as Bitcoin stays decentralized and secure, that is where we're going as a society, to somewhere that is almost unimaginable. It's so beautiful, so hopeful for humanity, but almost unimaginable from our current paradigm. And that's actually part of the problem today in Bitcoin, that so many people are stuck in the existing paradigm that they're conflating, they're bringing the existing paradigm that's always existed into Bitcoin, thinking it needs to act like that. And so they're actually playing into the centralization of Bitcoin by doing so too, because it's such a different, like, it just let's start in first principles. These systems are incompatible together. One allows deflation, and all prices fall relative to money, and one doesn't. The one that doesn't has to centralize, because otherwise it would fail. So let's start there. Is that true or not true? It's true, right?
Yeah, I think so. I think it's just not easy to run that kind of monetary system unless you have a centralized system. I think it's because with Bitcoin, you can do it with something like the difficulty adjustment as long as the supply is agreed upon by everybody. But the only reason everybody agrees to the supply is because it is done in a fair way where nobody gets to have admin oversight over it. Whereas in fiat, the whole point is that it's going to be unfair. That's why the whole thing is designed.
Maybe I'm going to, so yes, so let's just say, but if Bitcoin stayed decentralized and secure, then nothing else we're talking about actually matters. Prices will fall forever relative to it. So that's again, and why I say if is and specifically that is because throughout all history, if you could control money, not you might, you would. Governments would control, you would control if you could create, because you get to shave a little bit off of everybody's productivity that they wouldn't see and accrue it. So we know both those things are true. We know if it stays decentralized and secure, then an entirely new world that we were just talking about before, abundance, all humans acting in service of everybody else, happens, and the entire planet moves to this system. And we also know that no currency has ever stayed decentralized and secure because it would be hard to see this, right? So all of our incentives would be captured by the other system, and the control structure would give, and throughout history, we've always seen money get co-opted. Always. Gold gets co-opted. And so through that lens, it is one of the things you kind of wanted me to talk about today, and Fedi and other things. When I came to Bitcoin, I realized that how hard the system would fight to be able to capture Bitcoin, and how most people would get confused within that fight because they'd never played this new game that we're playing. And so the probabilities of Bitcoin failing in time, when I first did this, I assigned about a 5% probability of Bitcoin failing. Now, I was wrong. right? Bitcoin at layer 1 failing 5%. And I was wrong because I hadn't done the work to understand why it wouldn't fail. And why it wouldn't fail is we are all nodes keeping it secure. But now from that same thing, you realize all of human history will always centralize because and money gets co-opted. You have a new system that people really don't understand very well, and you were states, and you were and a massive control structure that lost the war for layer 1. You couldn't centralize it. It's impossible. Now, if you knew all of that, what would you do to layer 2? Well, you have the same information that you and I have. Right? You know how you can't stop at layer 1. What would you do on layer 2? Because you would have to control layer 2 to be able to co-opt Bitcoin through layer 2.
I mean, I would imagine, I think one good attack vector, and I don't think this really succeeds, I should say from the beginning, I don't think this really succeeds in the long term, but it can put some sticks in the wheels and sand in the gears, if you want, in the short and medium term, which is to try and spam block space as much as possible, and therefore make it more and more expensive for people to use the first layer, but also to set up channels on Lightning or use other kind of second layer scaling solutions, which ultimately still require some block space. And so you could undermine that. You could try and go with that angle of attack. But I think that that's just quite difficult because mining is still an open free market and anybody could get into it. And so if you're doing this, you're subsidizing miners. And so you're giving a lot of money to miners, which ultimately a lot of miners are very hardcore Bitcoiners who will use it to buy more Bitcoin and hold more Bitcoin. So in a sense, it can be self-defeating in the long run.
Yeah.
But tell me what would you do?
So why I haven't even worried about that attack or said a word about that attack is because that I totally agree with you. All that does is pay more miners to distribute more, to chase energy around the world faster. And it's an economic, and no oracle on top within Bitcoin will work. That'll move to the second or third layers. So just because the cost to introduce an oracle, like you said, is too high. All of these companies are going to fail. All they're just going to do is help miners distribute more. So I don't see that as any sort of attack factor that I'm worried about whatsoever. How I think about it is, I would tell everybody that Bitcoin is going to be a core part of the US dollar. And I would move from and I would convince people that US dollar and Bitcoin are synonymous. And I would use the money printing that I would be allowed to do through Tether to be able to fund the US Treasury further, and convince people to pay in the second layer, US dollar, around the world and other currencies around the world. And I'd arbitrage the spread between Bitcoin and that, and it would create a massive money-making machine to be able to convince people to do it more. And as everybody was using this new layer on top of Bitcoin, which would centralize naturally, because it has to, because the free market is deflationary and this one's inflationary, so it has to centralize more.
The Bitcoin Standard podcast is brought to you by Orange Pill app, the Bitcoin-only social network that connects you with high-signal Bitcoiners, events, and now merchants as well. If you're like me and can't stop talking about Bitcoin, you know how challenging it can be to talk to the no-coiners and how nice it is to talk to someone who gets you. With the Orange Pill app, you can find the Bitcoiners near you and they can replace the no-coiners in your life. You can organize events and meetups with local Bitcoiners, and wherever you travel, you can meet up with local Bitcoiners, all while being as anonymous as you like. So if you want to build your local network of Bitcoiners, find a Bitcoin meetup or merchants accepting Bitcoin, head over to orangepillapp.com to sign up or download the app from the App Store or Google Play Store and send me a DM so we can get connected.
I would make Bitcoin like gold was before. And I would through derivative instruments, nobody would know how much Bitcoin there actually was, and you'd be using this second layer, and I think the amount of people that are falling into a trap of US dollar on Bitcoin instead of native Bitcoin spending in Bitcoin, because they want their price of Bitcoin to go up in US dollars versus the free market, which allows all prices to fall, would be so overwhelmingly strong. And then other countries would be doing the same thing, pegged to US dollar, and they would be using these stable coins. And all a stable coin is something guaranteed to lose money against Bitcoin, right? With less volatility, right? But a guaranteed loss against Bitcoin. And then through that, you would consolidate layer 2.
And so how do you see that consolidation happening in practical sense?
So this is happening right now. This is people all over the world use Tether. People all over they don't actually use Bitcoin. Tether has to be part of the state apparatus. Right? You wouldn't allow something like that to work with that much power. Now you have senators and such advocating for stable coins of US dollars on top of Bitcoin, right? Because you need the money from that to fund the treasury. Remember that whole system, that inflationary system, has to centralize. We're talking about the same centralization. All you've done, if that's what that looks like, is you've moved from gold, which was co-opted, to the petrodollar system, which is co-opted, to the Bitcoin system, which would be co-opted. And this is why you asked about Fedi. This was our investment thesis in Fedi 2 years ago, or 2.5 years ago, and our investment thesis in Lightning, Breeze, and what Roy's doing, and other companies in the space, because Bitcoin needed to be native to be able to create the world where prices fall and human abundance thrives. But if you're measuring Bitcoin in price of US dollars go up, then you're actually playing into that trap, and you're making that stronger. And if just look around at how many Bitcoiners, look around at the people that you know that fought totally against the block size wars, right? And they were right. Small blocks, keep this decentralized and secure, that are now getting co-opted by the second attack on another layer. They saw all of the misinformation. They saw all of the games. They saw all of the Bitcoin's bad for the environment. They fought against it, and now US dollar go up on Bitcoin. They're comp all in.
Yeah, let me try and push back a little bit against some of this. So I think Tether and I would say the demand that Tether competes for is not really the demand for Bitcoin. It competes with foreign countries' fiat, non-dollar fiat, basically. So I think the majority of the people that are using it because it's an easier way to have money if you're in a country where your local banking system runs on a local crappy currency that is devaluing significantly compared to the dollar. So in that sense, I think of it as being more and more similar to the bank account of an American in the US, who, if you might have the majority of your net worth in Bitcoin, perhaps, but you still have day-to-day expenses in fiat. So I think Tether really competes with that. I think the demand for Bitcoin is different from this because initially people get into Tether to get into
US
something
dollars
that allows them access to the dollars. But I think eventually that then makes them keen on the idea that, look, the same way that your local currency was devaluing next to the dollar is devaluing next to Bitcoin. And then that flicks a switch of new demand for Bitcoin as a saving asset rather than as a competitor for Tether. So I guess what I'm trying to say here is that you could see Tether growing a lot without it really threatening Bitcoin in any practical sense. It's not really a competition, and I think it's entirely feasible in my mind that Tether could go significantly higher in terms of its market capitalization, because there are so many other currencies, fiat currencies, that are so much worse than the dollar, and it's getting easier and easier for people to access Tether on these currencies. But I don't see how that threatens Bitcoin's decentralization.
But let's keep going there. So what you're saying is, because I think that's the nugget of what I'm talking about. I agree with you, by the way. People will use it because it's easy to use and it's so much better than their currency. And what are they doing by using it? So what, and those incentives are so great. And where does the money come by using it? So and then what would the incentives, if you were building that, if you were the business inside that, is your incentive to move people to Bitcoin, or is your incentive to keep them on Tether? And then if those incentives are or another stable coin or another LT2, just think about the incentives in the business or the US dollar. Is your incentive to keep them in the US dollar, or is your incentive to move them to Bitcoin? And I suspect that because those incentives are paid for by the same thing that we're talking about, it's more centralization and it's faster centralization as a result of this. And that's where the natural market takes you because of that same thing. People won't know. People won't know how many truly in Bitcoin today think through prices falling forever, as we discussed about in the beginning. Most 99.9% of this planet thinks prices rise, so they will be fooled into this.
Yeah, but I mean, ultimately, the people who run these stablecoins can't really keep people away from Bitcoin, and the number go up, you may mock it, but ultimately it is what's going to draw these people's attention, that they're going to realize that what's happening to their USDT next to Bitcoin is similar to what is happening to their local fiat next to Bitcoin in the long term. And it's going to continue to draw more attention. And then, Bitcoin is a permissionless system. But I think ultimately, of course, I agree with you that there's going to likely be more centralization with stablecoins, and then we're going to, the success of stablecoins is not really like the success of Bitcoin, in that with Bitcoin you can see why it gets more and more decentralized, whereas with stablecoins, that there is a single point of failure, and there is political risk, and there is counterparty risk, and there are all kinds of risks involved. So as it grows, sure, the risk of centralization on these currencies grows, and I think that ends up being good advertisement for Bitcoin, and drives more demand to Bitcoin.
Maybe the simple way to say, unless Bitcoin becomes medium of exchange as well, then Bitcoin will be co-opted by layer 2. That's probably a better way to say what say. It will be. Because people won't know the derivative instrument on top of Bitcoin, just like they didn't know the derivative instrument on top of gold. They couldn't, they were using the thing that was inflating supply, and they couldn't see what was the truth underneath it. And the same thing would have to happen on top of Bitcoin. Not might, it would have to. And so this is an attack vector that we saw a long time ago, or I saw, because it would have to, through human incentives, and if the world has never seen a decentralized currency, or not just a decentralized store of value, like a protocol, but also a decentralized currency that was on top of that, then you'd have to expect that and you knew that you missed layer 1, you would do everything to make sure you could win layer 2.
Yeah, but I'm still looking for something more concrete about how this centralization risk really plays out. I mean, I get it, what you're saying in terms of if people don't use it for daily transactions, if it's not widely used as a form of money, then it risks getting more and more centralized. But the way that I see it is the growing use of it in day-to-day transactions is something that happens as a result of its growth in value, as the result of the growth in the size of cash balances in it. So as it currently stands, Bitcoin is less than 0.5% of all of the world's cash balances. And so the odds of two people transacting in a market and both having cash balances in Bitcoin is 0.5% for each one of them. So it's unlikely that a lot of these transactions emerge because people deal with people for all kinds of things, and you don't buy things from people usually because of the money that you use. You buy it because of the thing that you want. So as the size of cash balances in Bitcoins increases, I think that's when we're going to start seeing, we're constantly seeing this process, which is constantly happening, which is more cash balances incentivize people to engage in more spending as the value of the coins increases. And then that incentivizes the adoption and use of more scaling solutions to allow people to use it. So in a sense, there is the market incentive baked into the use of Bitcoin that you need to figure out how to start using it efficiently and effectively as your cash balances in it increase.
So I think two sides. From the Western world, for where we are, you'd see it as a store of value first. And from other areas, you might see it as a circular economy because you're unbanked. And so you see both. So some people get to the store of value through the ability to use this because they're unbanked. And some people get to the store of value because they're in money where money is not depreciating as fast, and they have banking systems. So I think those are just two different sides of understanding this. But ultimately, if this didn't become maybe I just want to highlight the natural incentives to not use Bitcoin as a payment mechanism, and all of the economic incentives that companies will tell you not to do to save your Bitcoin and not to spend it, and all of the money that is made from that transaction within stable coins provides a centralizing force because the natural market is deflationary and this other market is not. They're incompatible. Those two systems are incompatible. So I think what we're talking about is as we go further and further down this path on both two systems, what you're saying, I think, is as they do this, these centralized ones will break, and then they'll find Bitcoin. I think that's what you're saying. And these centralized ones won't be allowed to break because the entire system will fail. So they'll be bailed out by governments, and they'll centralize further. And it provides more of a risk to the underlying asset, because people will think that's safe through that. And just structurally, that's what has to happen. So you have to have layer 2, layer 3 solutions that are protected and that allow you to be able to spend in Bitcoin, native to Bitcoin, without any token, without anything else inside that, to allow Bitcoin to actually stay decentralized and secure across the entire spectrum, across the protocol.
Yeah, that's ultimately, I think, what it comes down to. We need to find more and more of these. People can be unreasonable in terms of their expectations on scaling technology, in that we currently live in a world in which we have one full node, which is the US Federal Reserve, and everybody else has an account at the Federal Reserve, which can be shut down at any point in time. And then the creation of money is a very arcane process that benefits some people at the expense of others. And it's an entirely messed up system because of this centralization. Now, I guess some of the early Bitcoin evangelists focused on the idea that you could get free instant transactions all over the world. And this gave people this kind of unreasonable expectation that Bitcoin is going to allow everybody in the world to get instant free payments anonymously at basically any time they want. And that's just not the reality of it. There is a scale to how much transactions you can fit on chain. But the ridiculous thing here is to think and say, well, if we can't get to 8 billion nodes transacting fully on chain, then we might as well just stick to one node. No, there is an enormous, enormous sea of shades of gray between one node and 8 billion nodes. And going from one node to a world of, say, 10 million nodes is an infinitely better improvement, because a million nodes are going to mean nobody controls the money supply, a lot more transparency, and a lot less ability for central banks or these nodes. Effectively, that's what a central bank is in that kind of scenario. A lot less ability for them to create unbacked credit liabilities that they sell off at face value when they don't have the backing for them. Because in a world in which you have the many decentralized entities, there's no entity that can print money to bail out somebody who engages in these things. And so ultimately, I see it becoming a lot more transparent and a lot less fraudulent than the fiat system, which ultimately has one referee at the end that decides everything.
This podcast is also brought to you by the Bitcoin Way, your professional Bitcoin IT team offering you personalized, secure, and comprehensive solutions for every step along your Bitcoin journey. The Bitcoin Way offer live concierge service to guide you with your Bitcoin cold storage, running your node, privacy best practices, inheritance planning, corporate strategy, and multi-sig solutions. They don't touch your coins, they guide you through the process of acquiring your coins and securing them. If you'd like to make your setup safer and more reliable, book a consult with them and see what they have to suggest. If you want to give someone the gift of Bitcoin, get them this professional service that will ensure they start off knowing exactly how to manage their coins and not lose them. Go to thebitcoinway.com and start Bitcoining more confidently.
Yeah, so I see it in why it's hard to understand. I see it in protocol layers, and we don't see protocols very often. So if you layer one of the new protocol, or what we're talking about, layer one is a protocol bounded by energy, decentralized and secure protocol bounded by energy. So whatever you do against that protocol, if you want to print money against that protocol bounded by energy, then its pricing, it's the true price is bounded by energy, and the pieces of paper you're printing against have no relation to it whatsoever. Doesn't matter. So prices it's only true free market, and it's outside of everything else. So I think you and I totally agree on that. Layer two, an interoperability layer on top of that, or kind of the road network on top of that, is Lightning. And that is allowing, and so layer one can't scale to 8 billion people because of the transaction fees. And so everybody knows that. So, but layer one of the internet couldn't either. In layers, you do one narrow thing. In protocols, you do one narrow thing that can't be attacked, and then you build layers on top of it. So Lightning is trade-offs within on top of Bitcoin that provide interoperability on top of that, while tethering to the protocol layer one, right? So you gain the security of it through layer two, and if any different Lightning node fail, then you have many others to choose from. Layer three, or layer 2.5, you could call Fediment, what's happening there, or Cashew, which allows you to bring this to 8 billion people with different trade-offs, without the risk of the consolidation. That's and so not everybody has to transact on layer one to be able to get the decentralized and security. They can transact on different layers. And I think where there might be a little, and remember, we're so early in this, and it's going to be really confusing, and things are going to change, that I think some of the nuance here is what, and I'm making it almost black and white. But if layer two is the US dollar, then all we've replaced is Bitcoin, or the US dollar to gold, US dollar to petrodollar system, US dollar to Bitcoin. That's all we've done. And we still have an extractive economy globally. So how do we make sure that we don't do that? How do we make sure that we're building this, that people are building it, and this in a way that know what's up for grabs, and that we're building prosperity, abundance for every human on this planet, through the free market that is Bitcoin. That's really what, and I think Fediment is one of those things that makes this unstoppable. It makes that it gives, it's almost the because you can set up a Fediment community or a Fedi community, and the guardians underneath are almost like multi-sig on Bitcoin, and you can transact into that pegged 1-to-1 to Bitcoin with almost no fees or zero fees in a completely privacy preserving way. So what does that mean? If you're in North Korea and your guardians are outside North Korea, then you can use this completely and nobody could stop you or know you're using it. And they couldn't find the guardians. So that gives, what that gives is as more and more people set up these tied to Bitcoin, you have a scaling solution that just explodes around the world. That's interoperable with all of them. Cashew is similar.
Yeah, it's a really fascinating example because it looks like it really ticks a lot of boxes in terms of its privacy and censorship resistance and its scaling capacity,
and no throat to choke, no centralized, and how that deals with it is it deals with it from so many federations that almost like so many nodes in Bitcoin that you couldn't shut them all down. They'll keep on popping up forever.
So how does it work operationally? Say I'm somebody living in a country where they're going after Bitcoiners. How do I keep my Bitcoin on my wallet and not have them find out about it?
So my view is still layer one custodial hard wallet. That's still Fedi doesn't replace that, although it could replace that if you wanted to. And so think about how you might do your cold storage. You might run a 3 of 5 multi-sig and give keywords to different people all over the world, or have one held by Unchained and you hold one and somebody else, you would run a custodial solution or a non-custodial solution like that on hardware. So you're protected from any one of those failures and your Bitcoin's protected. Similarly, what Fediment did is built that type of technology in multi-sig into Fediment or into eCash that did the same thing. So now what does that mean? It means I could have a family federation that has pegged my Bitcoin 1-to-1 and 3 of 5 of my family would have to conspire against me to be able to take it. But it also means if I lost it, I could go back to them and say, hey, it's me. I have my Bitcoin back. And reinstall it. So now that whether it's 5 people, 3 of 5, or it's 5 guardians holding for 2,000 people or 10 million people, what that would say is the bigger the federation, the more risk that the guardians could conspire against taking funds or moving the funds, kind of go from it was 1-to-1 Bitcoin to eCash, and then it becomes fractionalized and nobody knows, and they're trading in eCash. So the same risk kind of happens in that. So how would you prevent that risk? You would have multiple federations. You would set up multiple federations, and maybe every 30 days you would sweep the cash. You'd create a bank run in the federation to make sure that it was fully reserved. And that's why by having many federations and that optionality to take all of these, anyone you want, or set up your own, gives you the ability to stay honest within that system, that it gives a scaling solution to Bitcoin.
Yeah. I think that's really fascinating and interesting. I mean, I'm curious to try it out more and see more people use it and see how it continues to grow. What are your expectations in terms of I don't know, user growth or um, first of all, is it easy for you to tell how much it is being used or not really, because these kind of
So it's going to be launched in early August out of beta. And why this needed to be kind of battle tested in every possible way is when you're providing this type of technology for people in dictatorships that can't have access to money, and those people need to be protected, and this thing needs to be bulletproof. There can be no attack vector. And so for the last 2 years, the team, extraordinary team, has built this in a way that is essentially unruggable. It's so hard, it's impossible to break. It needed to look like that before broad release because it's so powerful tech that it will be. States would have to try to clamp down on it, and the people that are using it, it's like life saving. You talk about what's happening in Palestine. You talk about what's happening. If you could just imagine, I know you can, what it looks like for people like there that have their bank accounts seized, that don't have access, that are being persecuted. By the way, both sides of every conflict, there's so much fog and war that just they don't know. People are being brainwashed into thinking this is the right thing in the world, and it comes from that same extractive model. So that extractive model has so much power over you, has so much power over your mind. It has so much power over by debanking people that if you didn't have something that was bulletproof like this, it would be killed. And so for over 2 years, this team has been building this in a way that's completely bulletproof. And then you find things that that are surprises for being this early in a company, that you know they're being watched, right? Because if this view of the world, I don't know why anybody wouldn't want this view of the world, because it leads to hope, freedom, abundance for the entire planet. But if you didn't, if you were one of the people that wanted to extract, you would do everything to stop this technology. And just going back through the lens, all currencies have always been co-opted. So you have to have a really high bar on what's coming to co-opt Bitcoin as well through whatever layers you want, and you have to take that high bar into everything you're doing. I think that's what Fedi has done. I think that was Fediment has done, to be able to provide a scaling solution to Bitcoin that is congruent with the world that I see, anyways. Human rights and freedoms of 8 billion people.
Yeah, I definitely hope so. I think it's really going to have to come to several of these scaling solutions being utilized all over the world, and the more diversity there is in them, the harder it is to knock them down. Because where do you start? How do you attack? If we're just all stuck in one kind of ecosystem, then it becomes a centralizing risk.
LA came out with today, from Cashew, came out today with essentially allowing, instead of the DNS through the existing HTTP system, to be able to do that through Nostr, which means the internet can live on Nostr, and there's no ability to shut down different IPs and different things. Which these breakthroughs, the free market moving to these solutions, because they understand how important decentralization and security is for humanity. And the more you understand that, the more you're building. And there's tons of builders that are building this, and it's all interoperable with each other, which is really, really powerful. Which I agree with you. These types of scaling solutions are critical in driving the world that we're talking about.
Yeah, absolutely. And I think this is it's one of the many interesting applications of Nostr. I talk about Nostr, unfortunately, more than I use it. It's proven, Twitter has continued to prove a harder addiction to kick than I keep anticipating. But I
Safe,
mean,
safe.
yeah,
Go into that just inside yourself,
uh,
and say the same thing on the monetary system, right? Because the centralization of the things provides so much simplicity to you, and you stay there because everyone else is. It is such a force. The same thing we were talking about, how money gets consolidated, is money gets consolidated because we get consolidated, because we make the trade-offs every day. We know, you know more than anybody where Nostr is going, why you should be there,
yeah,
right? And yet you spend your time in the centralized system. So if you know this and how smart you are on these systems, right, on what this looks like, then and you're way to the right on most people in the world, and still you get stuck there. So now imagine that at a system of money, and all of the people that we were talking about before on US dollar to Bitcoin and Tether and everything else and all of this. That's where they will get stuck and they won't know.
yeah. I mean, I think with Twitter and Nostr, I appreciate the comparison, but I think there's a very big difference between the move from fiat to dollars, because Twitter ultimately is not robbing you of money in the same way that the dollar is. And, for all of the unhealthy things that you could do on Twitter and all the unhealthy ways in which you could spend your time, I believe there is a way to use it in a way that's very productive. And so I've learned a lot from Twitter. Most of the things I've learned about Bitcoin and about all kinds of things that have improved my life in all kinds of ways. Um, Bitcoin is just one of them, but health and fitness and all kinds of other stuff. So you can learn from it, and you can use it well to promote your products, books in my case. And so it's not quite as abusive as the dollar.
I agree with you. I'm just using, yeah, I'm using an analog because when I see Nostr, this shape of Nostr today and what Nostr looks like today and where it's going, I see the same thing that I saw in Bitcoin, in like early Bitcoin, and all of the people talking about Bitcoin from the others, the system. So that's the analog I'm using, right? Not that it's the same impact as money, but it is tied on top of money. It is tied on, the incentives of broken money are completely within Twitter, because the marketing for it, the whole thing, comes from the same incentives that centralize. They give more power to people that are centralizing.
Yeah, it's true. And yeah, I mean, we saw, we used to, there was a time in which we internet people used to look down on TV people. I am particularly guilty of this. But I think we saw over the last few years how Twitter has been commandeered for propaganda before. And I mean, it's gotten better on that regard, at least since Musk came in. But I wouldn't be surprised if it's still, it's still not perfect, and it's very likely to continue to get commandeered one way or the other and get corrupted and used in various ways. So, and of course, the advantage that Nostr has is that it's a protocol. It's not a startup, and it doesn't need to keep continuously paying for advertisement and office space and developers. It's a software protocol that anybody can use, and so people are incentivized to work on it, and that continues to make it better over time.
Yeah, and these, I think that people are missing how fast this happens, because when you have interoperability at the protocol level between money, communication, right, and so now think about these protocols. You have Fediment, you have Cashew, you have Nostr, you have Bitcoin, you have Lightning, and the interoperability of those, that anybody can build more on and use all of the other pieces to be able to build, means faster and faster innovation and lower cost innovation that keeps on driving that protocol. So open protocols win. And what you're saying is these protocols coming together, or in layers, these coming together, are driving an explosion of new opportunities, which will make this better, faster, cheaper in ways people can't even imagine today.
Yeah. Yeah, I mean it's going to have to over time just prove itself out from the fact that it doesn't have the centralization risk that is going to create all kinds of slippery bananas along the way for all of the current incumbents in the social media game.
Yeah.
Yeah.
Yeah, and that centralization risk is one. So, and from some of my work before, a new company needs 10x improvement over an established incumbent to even have a chance of success. And so, if your only improvement on Nostr in the early going is I have less risk of getting deplatformed against Twitter, it's not enough to be able to move people. But what's happening now is you're integrating Bitcoin into it or payments into it natively, and you're adding more and more advantage, which then all of a sudden people say, "Oh my God, I have everything here." And so much more than I had on Twitter, and that's where we're really early in that. Really early in that today.
All right. What other things do you look forward to in the Bitcoin space? What other things excite you, and you think, or, I mean, maybe it could be startups or software or whatever it is.
Well, I think Lightning. I think what Roy is doing over at Breeze. I think that's you have largely unknown. You have tons of capital chasing L2s from the existing system, wanting to create a token, venture capital creating a token on top of Bitcoin. And I just think if you've lived your entire life in a world of financialization, and that's been your source of wealth, then you'll want to financialize more. And from that world, if you to deconstruct what's happening, so what we already talked about early in the show, that your house shouldn't be the value that it's at. It's the value it is at because of the money printing. And so in that money printing and the debt attached to that means the amount of debt in the world is so outrageous, which if the debt defaulted, the house wouldn't be nearly worth what it is. Right. So the house value would collapse. So if you allowed deflation from that system, everything would collapse. And so from that, that you're way overpaying and have way too much debt into a house, because in Bitcoin terms, the house is falling to its marginal cost of production, right? Or its utility. Let's use, instead of marginal cost of production in a house, let's use utility value. Instead of a store of value against debasing currencies, it's falling to its utility value, what you want to pay for a house to enjoy it with your family. And so if you're measuring from the fiat world, you're measuring, I need more debt and everything else to be able to put up in that, you're in the financialization game. If you're measuring from the Bitcoin world, it's falling to its utility value. And lots of people in Bitcoiners will buy houses on the way as they keep falling to the utility value with their Bitcoin. So they'll be overpaying in Bitcoin for those because they want that today. So that's going to happen, and it's going to distribute Bitcoin more and more through that process. But you can say one system's way over leveraged, requires financialization. One system doesn't require the leverage; prices are falling against it. That means a total differentiation as debt gets destroyed, and real wealth gets built on the Bitcoin system, and yet debt gets destroyed, and everybody grabs that debt at whatever type of level they want as it gets destroyed through inflation or deflation. But that's going to happen. But it means the last 30, 40, 50 years, maybe more than that, all money has been made through financialization. All of it. So if you've made all your money through financialization, then seeing Bitcoin and how to financialize it further, put houses on the blockchain, put different tokens on the blockchain, it would make perfect sense. If you see Bitcoin through it's repricing the world, and all prices are falling relative to it, that would make perfect sense. And those two constructs are defining where people are investing. Where we're investing is we have a view that the return rate of Bitcoin over the next 15 years is going to be between 40 and 45% IRR. So the only place you would invest is where can you beat that return rate, because that's the true free market, and the only free market we've ever seen that's in Bitcoin. So where would you beat that? The only way to beat it, and over the long term, is to build companies that are providing value on top of Bitcoin, and then and by that value accruing more Bitcoin on their balance sheets, and building, and so they're growing extraordinarily fast and building by providing value and building Bitcoin on their balance sheets. So from there, we think what we're doing in Ego Death Capital is getting venture returns on top of a venture asset by fully embracing the free market that is Bitcoin.
Yeah, that is very. It is a very challenging thing. I think people being able to get a positive return on Bitcoin in Bitcoin terms is always going to be a challenge, and so. Yeah, but I think one way to do it is to go to Bitcoin-denominated companies, as you say, because then at least they're kind of cheating by.
Yeah, because why would it be a challenge, right? So use a different example, just in a different day. So if you were in Argentina in 1999 or 2000 when Google started, and Google came to you and said you can invest your Argentina peso into my tech company that's denominating in U.S. currency, that'd be a pretty good trade, right? You had the growth of the tech company across the tech internet space that was exploding. Plus, you had the change in your Argentina currency to U.S. currency, which did far better than your Argentina currency. Why would that trade be any different than what's happening today to Bitcoin? It's exactly the same thing. It's exactly the same thing. It's just people are so used to the U.S. currency, they're pricing in the U.S. currency, and we're pricing in Bitcoin.
Yeah, absolutely. Yeah, it's just the way that I see it, the way that it would be difficult is that, or the reason that it is difficult is that I think of it as being like early stage venture capital, investing in something that is a startup that is out there disrupting central banks. And that's going to have to be very, very profitable, because there are, in my opinion, no problems more pressing in the world than putting central banks out of business. So every time anybody gets into Bitcoin, you are, as a Bitcoin holder, as somebody who's in buying the tokens, you're effectively profiting from the growth of the company. It's not a company, it's obviously a decentralized protocol, but it functions like a startup, where instead of having stocks and having dividends, the stock, or the closest thing that we have to the stock, is to hold the asset itself, because everybody has to use the asset. And so more people get into this kind of spontaneous conspiracy to build a startup that disrupts and replaces central banks. The more people get into it, the more that startup is providing value. And so the more people that bought in earlier benefit from it. And what this is telling you right now is, and of course there's no yield, so you can't say that this is a Ponzi, because the yield can't continue to grow. The problem with the Ponzi scheme is that the yield cannot continue to keep up with the growth. But here in Bitcoin, there is no yield. The yield's always zero. So there is no reason for it to ever stop offering the same kind of increase in valuation, which is the only kind of return that it offers, and that the Bitcoin asset itself appreciates. So what this is saying in my mind is that it's difficult to beat this, because it's difficult to find a business idea that is better for humanity than putting central banks out of business. I think this is just the most profitable thing you could possibly do.
Yeah. So actually, I tend to agree with that in the fact that if you compare it to the internet, you're investing by investing in Bitcoin, you're investing in the new internet. And that means all the value on top of the new internet accrues to you in an aggregate way. That's the 45% per year return. All of the value as this system changes. Now, but on the internet as well, there were companies that far outperformed the value of that by creating extraordinary value for us. And so now what type of companies can provide extraordinary value in Bitcoin terms? They would have to be things that provided infrastructure type of level growth to Bitcoin, like what I was talking about with Breeze and their SDK, like what I was talking about with Fedi and what they're doing. And the growth came from accelerating the Bitcoin ecosystem. So you'd need both, right? You'd need all of these entrepreneurs that were kind of put their pucks on net, creating opportunities, just like all of the other entrepreneurs on top of the internet. And all of those would provide faster and faster momentum. And most of those on top of that would fail. And even when I say fail, they would provide insights to what would work next time. But most of those insights would like, if you just use a wallet as an example, prices fall to the marginal cost of production, and there's, I don't know, 1,000, 10,000 wallets. How could you make long-term value in a wallet? So now, where can you create in a competitive free market system that's constantly competing against each other? And a lot of these things are going to the prices falling the marginal cost of production, which is free. How do you create value on top of that to expand that system? So you're right. That's how we think. That is how we think about this. And how do you? And then, but I will say this: there's an insight, and it was something that I was not expecting. In venture capital in the existing system, you kind of go from pre-seed to seed to Series A to B to C to D to sometimes E, F, G, then public. Like all tons of capital into these. What we're seeing often, seed to A to super profitable. In Bitcoin terms, adding Bitcoin to the balance sheet every month. So it doesn't look because it's, and maybe this gets into what we talked about. Maybe it's some of our picking in these companies. Maybe it's some of, but maybe it's some of what would naturally be in a system like this. Your capital needs to be more productive. It's not this whole manipulated system that is unproductive capital everywhere. And when that capital is productive and produces value for others, they explode. The companies explode, and tons of value. And by those companies exploding, growing so fast, their balance sheets are increasing in Bitcoin terms.
Yeah. Well, thank you so much, Jeff. That's been very insightful and interesting, and I wish you all the best of luck. Anything else you want to leave our listeners with?
No, this was really good. Good to see you again.
All right, man. Take care.
Okay, you too.
Cheers. Bye-bye.